How companies are becoming creative with accounting during the COVID-19 pandemic. COVID-19 is leading to new non-GAAP metrics and could prompt companies to dump all sorts of costs into periods affected by the crisis. We see this very evidently with Uber and Lyft. The COVID-19 outbreak has brought out some creative accounting at companies as executives attempt to gauge the impact of the pandemic on their businesses and how they would have performed if the crisis hadn't all but shut the economy down. Before companies began reporting first quarter earnings, Twitter users joked that the outbreak would prompt new non-standard metrics that could be summarized as earnings before COVID-19 or EBITDA, and they even created a series of coffee mugs that satirized the concept. Indeed, some companies chose to post earnings metrics that removed the pandemic's impact. People will get creative telling their story, and our message is to be cautious of the creativity, said Sandy Peters, the head of global financing reporting policy at the CFA Institute in New York. Uber Technologies Incorporated, for example, has always reported a range of non-GAAP measures or those that do not comply with generally accepted accounting principles. The US accounting standard. Companies are allowed to supplement reporting with non-GAAP metrics, which they argue help provide insight to their underlying businesses, and they must lead with GAAP and offer a reconciliation of the two. Uber's non-standard metrics include adjusted net revenue, which the company says is needed because its drivers are its customers and not ride-hailing passengers. When the company filed its initial IPO documents in late 2018, the SEC took issue with some of the non-GAAP metrics in a series of comment letters. The company also reports adjusted EBITDA, or earnings before interest, taxes, depreciation, and amortization, which is already an adjusted number. The SEC allows that metric to be used, but because it's not standard, different companies adjust it in different ways, which can also confuse investors. The March quarter, Uber made further adjustments to both those metrics as COVID-19 outbreak hammered its ride-hailing business. The company increased its adjusted net revenue by $19 million to add back payments for financial assistance to drivers personally impacted by COVID-19. It increased adjusted EBITDA by $24 million to remove those relief payments to drivers, along with the costs of personal protective equipment given to drivers. That part is absolutely BS, ladies and gentlemen, because that personal protective equipment, PPE, truly still has not arrived at 80% of the drivers' addresses. Uber did not respond to a request for comment. Obviously, they didn't. I mean, this is definitely juicing and fudging the numbers in the finest way. In its earnings report, it said that exclusion of these metrics from the adjusted numbers was useful because it lets investors assess the impact of these responses initiatives on our results of operations. There are questions, however, about the validity of adjusting away business activities related to a global health crisis when it's unclear how long the pandemic will crimp Uber's business. Then there's networking companies, Inferna, which added back $2.88 million of coronavirus-related expenses in its adjusted numbers and provided a reconciliation that showed margin calculations. They're probably one of the better ones because you can see it and it reconciles. Overall, only a small fraction of companies tracked by law firm Bass, Berry & Sims adjusted their adjusted EBIT numbers for COVID-19 impacts based on a review of 55 reports filed between April 1st and May the 14th. COVID-19's impact on key performance indicators is clearly relevant information, but including it in the adjusted EBITDA metric itself implies that it should be regarded as a one-time event, he said. Unfortunately, it appears that the pandemic is more like the new normal and may impact operations in future periods even more significantly than it did during the first quarter. All right, I'll leave the link for you beneath the video, but no doubt about it, the companies are getting very, very creative in these difficult times. Your comments, please.